Hello, everybody. Hope you are all very well tonight, and welcome to the live stream. Um, Make sure everybody's in here. Let's take off that. Da-da-da. Cool. So I'll just post out. Hey all. I'll just quickly post in the
Hello,
Discord
everybody.
saying that we're
Hope you are
starting. All very well tonight, and welcome to the live stream. Just quickly post in here that it's starting. Live stream now started. Cool. Hello, everyone. Yes, so in today's live stream, I'm going to give it a bit of structure in that we're going to start off because I've had a lot of questions from different members here asking, and there seems to be a common question about stop losses. So that's what we're going to start off with tonight. I'm going to start off with how I use my stop losses because there seems to be a common confusion with stop losses, and I believe that a lot of people, place incorrect stop losses for me. So I want to cover that up in the first half. Or maybe it will only be 15 minutes or so. I'm going to cover the stop losses because that's what a lot of people have been asking, basically. And then after the stop losses have been covered, I will move on to discussing the technical analysis of the week, which we'll be going over on Bitcoin, and also I'll go over Ethereum for you all. Okay, so that will be the format. Hello, everybody. Um, yeah, I'm not sure how I can even view actually how many people are watching this. 13 at the moment. Cool. I mean, that's about half. We have 20 online, so maybe over the next few minutes, more people will come in. But as you all know, yeah, this will be available to watch back. I keep it unlisted, so only you, the members, have access to it. But it will be available, continuing over, however long you want to go back, weeks. So yeah, if you're live with me, welcome. And if you're watching this at a later date, then I hope you enjoy. So yeah, stop losses. Let's zoom. Let's just go onto a blank chart here where we can discuss it a bit better. Just remove all of this. Okay, so I have the way that I use a stop loss is different than many traders, and I also have a different stop loss. The way I use my stop loss is when I am using swing trades. Okay, when I'm in a swing trade, and it's a different strategy than when I am using when I am scalping. Okay, so when I am scalping. Okay, my general plan when scalping is literally trading for 1% gains. Okay, and when I'm scalping, I can be making 30, 40, 50 trades a day, and each gain is going to be aiming for 1% gain. And each loss, the biggest loss I will normally give myself is 0.5% loss. Okay, and just before we get into stop losses, I want to really, really stress to you all how important I find stop losses. Okay, so for me, yeah, apologies that my room is like a bit dark. Some people were commenting on this, but I just saw it then in the live stream. It's dark, but oh well. Yeah, but stop losses for me are really, really important. Okay, the whole risk management is super important as a trader, and too many people overlook the importance of risk management. Okay, um, for me, it's a really, really, really big topic, basically. And stop losses are so important, and the way that you use your stop loss, okay, every single trade. Yeah, referring to the poll that I ran here, so referring to this poll that I ran when we view the results here. We can see that the majority of you, the majority here are, have put themselves as beginner. Okay, so I'm going to, see these as the stats. It's would seem we have zero other, advanced traders. We have then nine, sort of intermediate, and the majority being beginner traders. Okay, so that's why, I have to, start off and make sure I'm explaining every single bit because obviously the majority here, it would seem, are beginner traders. Okay, and that's fair enough. So yeah, when using a stop loss, if you do not already, I just really want to stress to you all that a stop loss is super, super, super important. Okay, you never, ever, ever want to enter any position in trading without a stop loss in mind. Okay, it is very, very important. And the next question you'll be asking yourself is, okay, Daniel, where do I place my stop loss? Okay, and I want to say this, that there isn't a definitive answer, that there's not unfortunately, there's not a answer saying here's your stop loss every single time. That's the answer. The answer is, unfortunately not that simple when it comes to a stop loss, and it highly depends on each trader. Okay, so for instance, you get you get very what's the word I'm looking for here? Cautious traders, right? Yeah, you get very cautious traders, and then you get other, the other end of the spectrum. You got very, big risk takers. Okay, where what I'm referring to here is you can think of it like a triangle pattern, for example. You got people that will, you got a certain type of trader that buys, that buys the pattern before it breaks out. Okay, that's a sort of what I would call a more risk taking, or yeah, I guess more of a risk taking and advantageous sort of trader. And then you've got the more cautious trader that waits for the return and then buys it. Okay, so you got the one type of trader that is acting before, and then you got the other type of trader that's more cautious, waiting for confirmation. Okay, and that relates back to stop losses, just that that it's hard to tell me what to do, because everybody is so personal in the terms of how they are trading and their risk tolerance. That's the right word that I was looking for. Every trader has a different risk tolerance. Okay. So this is going to be an overview of the way I use my stop losses. Okay, the way I use my stop losses. But again, just to highlight that this isn't going to be the answer for everybody. Okay, I have quite a low risk tolerance. Okay, in the terms of there are times when I will not use a stop loss. Okay, I always have my alert set. I will always have alert set. But there are times when I will not enter with a stop loss, and I think this is not something I would ever, recommend to anybody. Uh, this is something that I was told to do. Bring this up, that this is not financial advice. Just so you're aware, please read this on the screen. This is not financial advice, but uh, that was something that someone told me that I really need to be doing. But yeah, the way that I sometimes will enter is with zero stop losses. Okay, just so you're aware of that. But the general way that I think that you should be looking at risk management if you are a newer trader is always using this long and this short position. Okay, always use these tools, please. Please, on on TradingView here before you enter a position, and you can get to these long and short tools on TradingView just on the left hand side here under the prediction and measurement tools, and you've got long position and short position. Okay, and this may be quite basic to some people here, and I apologize that if you are already aware of this, but I just obviously have to cover it from the beginning. So yeah, sorry if this is obvious to you, but for a lot of people it won't be. So obviously when you got here on the left hand side, you got the long position and you got the short positions. Okay, so let's say, okay, let's go over a real example here on Bitcoin. Okay, let's go back to our chart here that we're looking at on. Oh, actually, no, that one was messy. Let's just go back to our chart here, which is on Bitstamp, okay, which is more or less the same price as Bitfinex, okay, sorry, BitMEX, okay, so you can think of it this is as the BitMEX chart, and let's say, again, you might not know how to use this yet, but our Fibonacci retracement, and I will be going over this in the future, okay, but the Fibonacci retracement from the bottom of this move to the top of this move, and you can see Bitcoin right now is hovering around the 6.5, 618 golden ratio, okay, very much it's trying to find some support over the coming hours. Let's see if the bulls can push back up over the 618. Let's say we're looking right now at the 6.5, ratio, okay, for our Fibonacci retracement. And let's say you are a trader that is expecting a bounce from here and expecting upwards movement. Okay, this is all not what I'm expecting, okay, but for the purpose of an example. If you're looking to buy here, and let's say your target is just the top of this wick, okay, this is just some random example that I'm picking up here, so we'll see how it works out. But let's say your target is the top of this wick, okay. Before you enter any position, you want to have in mind your target, okay? Because that's what helps determine your risk to reward ratio. And I personally will enter into any trade that's over 2-to-1 risk to reward, okay? Because that comes with experience. The more experience you become, in my opinion, or the more successful you could become over time, the lower you can start aiming. But I would still never aim for less than a 2-to-1, okay? 2-to-1 is the lowest I would ever aim for. You know, if the risk reward is higher, then obviously that's better, but that's the lowest I would take. Where there are other traders that the lowest they would take is, you know, a 5-to-1 risk to reward ratio. It all depends really on your win rate, okay? Because imagine this. Let's say you play 10, you trade 10 times, and if you have a 5-to-1 risk to reward ratio, well, you can have a very low win rate, okay? Because, you know, you could take 5 losses in a row, win once, and you make back that money, okay? Whereas if you're on a 2-to-1, then you have to, you know, you have to have a higher win percentage. Although it could still obviously just be 50% and you're ahead. But, you know, the lower your win percentage, the higher your risk reward would be. And I personally think that for a beginner, the least you should be aiming for is a 3-to-1 risk to reward. Okay, at least at the very smallest side, 3-to-1. And just to show you how you're working that out, so let's take out our prediction tool, go into a long position, and let's buy. Hypothetically, off of this 6-5 ratio, okay, and to buy you just click here. Obviously, you know, we're not buying here, but you know, I think you understand that this is where we're entering our position on the 6-5 ratio because let's say we're expecting a bounce here. Okay, and this is something that you really, again, just to stress, you need to be doing every single trade you take. And then you move this top slider to where your target is. Okay, so this is coming on from more of a stop loss lesson now to a general risk management. But I'm going to cover the stop loss in a second. But I think it's so important that I just needed to cover it basically. So yeah, here we move up the slider to wherever our target would be. Let's just say we're aiming for this top wick region just below. Okay, then we move our stop loss slider to where we are comfortable placing our stop loss. Okay, and let me show a few ways where you can be taking your stop loss. Remember, this is what I would call a swing position. Okay, we're aiming for a swing position here. You know, we're looking at the 4-hour chart, which is quite a high time frame. Definitely not classed as a scalp trade. Okay, this is one that you could be holding for a few days. So we're looking for a good place to place our stop losses. Okay, I'm going to go over this in more detail in a few minutes, but let's just say that our stop loss, we are setting it just below the most recent low here. So we're placing our stop losses just below this low. As you can see on the chart, you know, this is the most recent low on this candle that we had dropped down today. So we're placing our stop loss just below that wick, okay? And you see that gives us a 5-to-1 or 5.09 if you want to be specific. Let's just call it a 5-to-1 risk to reward ratio trade, which is an absolutely amazing risk to reward ratio trade. Okay, that is a very good risk to reward ratio trade. Obviously, we have to factor in other things from here. Okay, you wouldn't just randomly place here and randomly place your target and randomly place your stop loss and think, oh, it's 5-to-1, it's a good entry. You do have to combine this with other technical analysis. You know, that's kind of obvious, but you have to, yeah, combine it with, you know, always be able to say to yourself, why are you buying here? Why is your target here? And why is your stop loss there? You really need to be able to answer those questions to yourself or to somebody before you enter that trade. Okay, so with that cleared up, you know, you're seeing a 5-to-1 risk to reward ratio. So that is classed as a good risk to reward ratio trade. Okay, so with that in mind, let's go over the places where you can be entering a stop loss. Okay, because that was the main focus of today's video, not risk management as much, and I kind of just got sidetracked with using this tool. And I will do a whole lesson in the future just dedicated on risk management, but tonight's is going to be stop losses. Okay, so yeah, when we're looking at stop losses, where are the places that I trade? Well, I will place my stop loss. As I said at the beginning of the video, if you were here, I have a different stop loss for swing trading as I do for scalp trading. First, I'll go over swing trading as we're on the 4-hour here. Okay. So what I like to do, what many traders will do first, I'll just tell you this. What many traders will do is, like the example, just place their stop loss below that most recent wick. Okay, and I'm not going to tell you that that's a wrong thing to do because, you know, really that is a good way to place a stop loss. If you get stopped out from this move, well then the price has broken a recent support level, and you know the price is obviously going to head further down. But the reason why I personally do not place my stop losses just below the recent price is because it's so easy to get a wick come down for liquidity to move back up. Okay, And let me explain to you why that happens. I'm sure it will have happened to you if you're a trader at some point. Definitely, I'm sure that you are in a, let's say you're in a long position here. Let's just say we took that example, we bought a long, and what happens is the price comes down just below where you had your stop losses, and then the price continues up, and you're like, oh god damn, like I was predicting this to go up, and what happened is I got stopped out, and then it continued up. That's really, really, really annoying, and that used to happen to me so much. Okay, when I was a newer trader, this was one of the biggest reasons why I continued to lose trades. And again, I'm not saying that this is a bad strategy if you are placing your stop losses like this. It's just something to think about. I'm just giving you a different thought process here. It could be that that is a successful trading strategy for you, having tight stop losses. Because yeah, let's say out of 10 trades, you get stopped out of 50% of your trades by a wick, but then you win the other 50%, and you're on a, let's say, a 3-to-1 risk to reward. Well, you are up a lot amount of money. You're up on your day of trading, let's say. So this will work for a lot of people, but it doesn't work for me consistently because I hate getting stopped out. Okay. So I give myself wider stop losses. The way to combat this is through wider stop losses. So this is, again, you have to be prepared that this is going to give you potential more loss. But I prefer to have that than get wicked out. Okay, that's just me personally and the way I view risk management. Okay, so the way that I place my stop losses are, I know that every normal trader, the average trader is going to have their stop loss placed here. What does that mean when the average trader has got their stop loss placed here? Well, what it means is that a big account, let's say we're talking players, there's several traders in this space, obviously, that are playing with at least, like, we're talking about 5 million, 10 million, 15 million in their account sizes. What you need when you have really big account sizes is you need liquidity. If you are wanting to open up a long order, it's hard to find liquidity. To be honest, if we're talking about the millions, it's hard to find liquidity when the volume itself is so low as well. You have to think we're on a really low volume period. Okay, so the way that the big trader will create liquidity for opening a long position here, if they're obviously we're talking about low volume, not a lot of liquidity here, is that, like I mentioned before, getting the price below a certain level where there is lots of stop losses to be placed. That creates a lot of people, getting their stop losses here. It creates a lot of people, buying back in here, okay, and or selling if they're in a long position and here's their stop loss, then they're selling. That creates the liquidity needed for a big account to make that price go back up, and that's just called a liquidity hunt. You may have heard of the term. Um, Yeah, exactly as Adrian just said. He's commented it exactly as I was saying, that this is called a stop hunt. Another word for it. I call it a liquidity hunt just because, I don't know. Yeah, I call it a liquidity hunt because bigger traders need liquidity to fill their positions. And basically, if they want to get their whole position filled, it's a lot easier to just bring it past a really big level than shoot the price the other way. Okay, and you just need that liquidity. And I, as a trader, I'm really aware of that. So the reason I combat this is by marking out a level where I expect a lot of traders to have their stop losses. Okay, so let's say I mark out here as where I predict a lot of traders will have their stop losses. Well, I will place my stop loss below the average level of where I believe most places, will be, which could even be down to this lower wick here. I think the average trader is going to have their stop loss, in my opinion, in this region. Okay, and again, this isn't a trade that I'm taking right now or for along from here or anything like this, but for the purpose of the example, I think the average trader would have their stop loss placed in this box. So what will I do? I will place my stop losses below that liquidity box. Okay, this is the liquidity box, so to speak. This is a name that I've kind of just made up. This is the liquidity box here. So I will place my stop loss below that liquidity box. Okay, and that eliminates the risk of having a wick down. Okay, it should eliminate the risk of having a wick down. And if we actually break through that liquidity area and I hit my stop, well, then I can be safely thinking that we're heading down to lower lows. Okay, if my stop is hit, it extremely rare if I hit a stop loss that is from a liquidity break. Okay, almost never I get stopped out from a liquidity break. If I get stopped out, it's because the move is actually, I was wrong on the trade, and I'm not saying that doesn't happen, but if I am stopped out, it's because the price is going against the trend, or what I thought was going to happen. Okay, let's say I was longing here and I was expecting a bounce. Yeah, it's likely that we can see something like this, but it's unlikely that it will come down and hit my stop loss and then bounce. It would be more likely that we actually are coming down here, and it was so much better to have this stop loss. And again, I just want to really highlight that this really depends on your risk to reward. Okay, I have wider stop losses because my win rate is a little bit better than average. Okay, so that's why I can afford to have larger stop losses, and it all goes back to using this tool. Okay, it all goes back to using this tool. That if you had been your placing your normal stop losses here, and your target was the top of this wick, then you have a 5 risk to reward ratio. And suddenly, if you give yourself this wider stop loss, then you're looking at a 2.4 risk to reward ratio. So you can see it almost halved your risk to reward. And remember at the start, I said a newer trader should be looking for at least 3 to 1. And suddenly, here is not a trade you should be taking. Again, for me, I take anything over 2 for 1. So it's a trade I would personally take, but I don't think a newer trader should be taking this trade because it's less than a 3 to 1. Okay, and a newer trader is generally not going to have a high win rate. So it's something to keep in mind the way that I use my stop losses. That it's not so much a recommended strategy for a beginner, but I thought for the purposes of education, I would tell you how I place my stop losses, and it's always below the liquidity box. Okay, and be my guest and try and test this out and try and do your own liquidity boxes and work out where that is going to be. Because it's extremely valuable to know that. Okay, it's extremely valuable to know where a liquidity box is, because it's likely exactly like this as well. This is a perfect example of what happened today on Bitcoin or over the last like 24, 48 hours. Okay, so I had a short actually placed at 3,764. Okay, I had a short when I got filled at this price level. Okay. Why did the price move up by this higher wick? Well, I personally believe it would have been because the average trader would have had their stop losses here. Okay, and the reason we went above that level just to get some liquidity for a short position, to come back down. Okay, big traders wanted their shorts filled. Okay, at a higher price, and two, to get a nice liquidity. And what this pump caused was stop losses going off at this level. Okay, opening up some nice liquidity for a move back down. Okay, so that's an example of what happened literally over the last 24 hours. So yeah, that's sorry, I'll take a few questions in regards to stop losses. So if you have a question, then we'll move on to the technical analysis. And I hope that has helped you. Well, obviously we've only been going on 23 minutes, but hope that was helpful in terms of stop losses, because I had a lot of questions. Yeah. First, before I take questions, I'll go over my scalping. I almost forgot. This is a problem with me. I always think I'm like, yeah, I want to cover that, and then I'll end up forgetting. So before I forget, how I do scalping. Okay. My scalping is always aiming for 1%. Okay, I just aim for like 1 to 1.5% on a trade. Okay, and the way that I place my stop losses, here is a kind of not great example in the 3-minute chart on Bitcoin, but just for the purpose of explaining, when I enter a trade on a stop loss for my scalps, I will be entering it into, so here we're on the 3-minute chart. Let's just see what this was on the 1-minute chart. I'm just aware that this, okay, actually, yeah, here we go. This is just quite a good example in the end. So we're here on the 1-minute chart on Bitcoin. So this is very much a scalping strategy. Okay, very much a scalping strategy. So if you are a swing trader, this is going to be of no use to you. And I think most beginners are swing traders, to be honest. You don't normally see a beginner scalper. Because it's harder, in my opinion. But let's say we moved out of here of our Bollinger Band. We're looking for a long position after we've obviously came down heavily. Our RSI is coming to the 12. We're hitting a 12 RSI. We're out of our 1-minute Bollinger Band. We're entering into a long position. And the way we enter into our long position is we've seen this first candle come down and close. We just enter into a long position. okay, off of that recent low, and we just enter it a little bit higher than the recent low, okay, and we're aiming for just a move to the 8 and 12, let's just say the 12 exponential moving average, or let's just keep it easy and say 8 exponential moving average, okay. We're aiming for the 8 exponential moving average here, which you can see is a 1% gain, okay, that's a 1% gain along just to the 8 exponential moving average, and I think major, and I give myself a 0.5% stop loss. Okay, that's the way I do it every single time. I give myself this 0.5% stop loss, and this is something that, you know, in this example, you'd have had to obviously have been very quick to enter, and you have to be on the ball ready. You know, you cannot waste time when you're scalping. You know, you're in and out. So you have to be aware of that. But you can see here on the example, you know, you give yourself a 0.5% stop loss. And I don't have time to bring out this tool, okay? By now I can eyeball it. You know, I'm very good at just eyeballing it and knowing straight away in my head whether this is going to be a good trade or not. You know, I don't have time to load up this tool every time. It's just not viable. But you know, so I can personally eyeball it, but you know, I don't think most people would. Well, I don't know. I don't believe a new trader would be able to eyeball it. So, you know, just here, you know, I'm aiming for the aiming for this 8 exponential moving average, having the 0.5% stop loss, and guess what? That gave me a 2.28 risk to reward ratio. As I mentioned before, it's over a 2. I am 100% taking that long trade. Okay. And that's how I do my stop losses on scalping. Okay, aiming for the 8, 12 exponential moving averages, also the 26. Okay, so I'll be aiming up to the 12, 26 EMA, where I'm taking percentages of profits on each hit. Okay, taking percentage of profit on each hit, say 33, 33, and 33. Okay, and I have this 0.5% stop loss every time. Sometimes it'll be as low as 0.2, sometimes it'll be 0.5, but the average is 0.5% because my average, you know, just what I'm looking for is literally just a 1% gain, and that gives me a 2 to 1. Now, if I'm aiming for, you know, 1% gain, let's say I'm just aiming for a 1% gain, okay, and my stop loss is a 0.5, well, that gives me my 2 to 1 risk to reward ratio that I personally require to enter into a position. Okay, and just so you can see on this example, obviously it come down outside of our Bollinger Bands, hits the 8, hits the 12, later hits the 26. Okay, quite a long trade if we're honest here. You'd have had to have the position open for about 32 minutes. So not the longest scalp in the world, quite an average trade. You can see within 5 minutes we were hitting our 8 exponential moving average. Within 10, let's say, we were hitting our 12, and then within 30 we were hitting the 26. I would have closed all of my long position on this trade after 30 minutes. Again, it would have obviously been a very successful trade, talking about a 1.5% total move up. Okay, then if you combine that with a little bit of leverage, then even better. But yeah, that's how I place my stop losses on scalping, and it's just 0.5 every single time. Okay. So yeah, if you have any questions, I'll take questions now, but regarding stop losses before I move on to the technical analysis. Does that work with higher time frame 15? Does that work with higher time frame 15-minute? Yes, it does, but you should probably give yourself a you know, I mean it's harder on the 15. Well, well actually it's not harder. It's exactly the same really. So yeah, it does work on the 15-minute. You know, the same strategy. But you have to remember that this 15-minute candle is comprised of 15 candles on the 1 minute. Okay, so this is comprised of 15 candles on the 1 minute. You know, hopefully that you understand a theory of how candles work. If not, I can cover it in another video. But this is, yeah, obviously comprised of 15 candles on the 1 minute. But if you're just looking at the 15-minute chart, then yes, it can work using that same strategy if you've had this long wick down. Obviously on the 15-minute chart we're having, you know, several candles move up and down within this here, but you know the same strategy can be used. Obviously though your reward's going to be higher, so you might want to give yourself more of a higher stop loss, because let's say we're entering near the bottom of this wick with our stop losses, you know, at around 0.5%, and you're looking for a reward up to this 8, 12 exponential moving average. Well, this is giving you a 3.7. So you can afford to give yourself a wider stop loss. Does that work with higher time frames? Would the order book be helpful to where most stop losses are at the moment you decide if you want to take a trade? The order book, good question, and I'm going to load this up in here. BitMEX. So on BitMEX, this is in. I'm not logged in here, but on BitMEX you can kind of see, where there are buys and orders placed. But for me, I wouldn't refer too much to this because I know there's so much buy and sell walls that are fake. I just think like the average trader, to be honest. I don't take too much notice of buy and sell walls, if I'm honest with you, because I believe the majority are fake. Fake sell walls and fake buy walls because they're so easy to scare markets. I've done it before where I'll just place a really high buy order, um, that I will, as soon as it moves up to my buy order, I will remove it. Okay, and it's just a tactic to scare newer traders that if they see a really big buy wall, then they'll adjust the way that they're trading. Okay, so it's a really easy way to scare the market. Also, the same theory applies for placing a really big sell wall. That if people see a really big sell wall, then they change they get a bit scared, like, oh my god, there's a really big sell wall, and they start to panic, and it's just so easy to do, and it literally works quite a lot of the time. So I generally, because of that's how I trade, I generally just never look at those sell walls and buy walls because it's a tactic I use. And I personally believe the majority. Obviously, there's some real ones that don't get me wrong. There are obviously some people that literally just want to hold it there. But if I'm placing a really big order, let me explain this. That if I'm placing a really big order, I will always place it in a hidden wall. Okay, and yes, it's sometimes easy to tell that I've got a hidden wall there because obviously the price will not move past this point, and it is a little bit obvious. But the average trader is, it helps me personally, and you have to remember that hidden walls, you have to pay a different fee. Okay, so you have to take into account the fee that you're paying. But sometimes, if I personally wanted to place a big order, I'd use a hidden wall, and I think that a lot of traders, bigger traders, also use the same strategy of hidden walls. So I normally just see if there's a buy or sell order, then it's a fake one, although not always. That's just how I look at it. So I hope that answers your question of if I would look at a sell or buy wall to place a stop order, back on the this chart here on the 4 hour that we were looking at. Let's zoom out. So I'm just going to take a really quick drink. Um, Basically, yeah. I do my liquidity box, and I just think like how the average trader would do it, rather than using basically rather than using the how a I just try and think like a newer trader. Okay, I was a newer trader at the start of my career. Obviously, everybody's a newer trader when they first start. So you can, you have that skill or the knowledge to know how a normal trader would start, which is obviously beneficial to you. Yeah. So just to say, I generally don't refer to buy and sell walls for that reason. Um, can you tell when the big move is finished so you don't get stopped out? Like today's dump was in two bursts. Yeah, there's not a definitive way that you can really know if a move's over, okay? As you may have watched my YouTube video from this morning, where I was saying we were holding up here. Okay, let's move it to the hour chart. Less than that. Well, we dumped down so quick. Okay, so I was saying during this consolidation period here, which obviously was not very long at all in the end. We're talking about 35 minutes, and then we jump down again. Although I said that, yeah, I'm not actually entering into a long, but when that first happened, I was saying, we could be seeing the opportunity for a long here. And as you know, I'm very cautious entering into a long in this market. Okay, I want to wait for that consolidation to play out rather than catching a knife. I'm not a trader that tries to knife catch in a bear market. Okay, but here you could have been looking, and there's no real way to know what this was going to dump down so fast. It was, you're not going to know that. And if you had entered to a long position here and had your stop losses set around 0.5 and you're targeting up, I don't know, to like a 15 EMA as it's coming down, you would have taken the loss on this trade, absolutely. And I personally wouldn't have been annoyed if I had entered here and got stopped out because it's just 0.5%. But you would have ended off with that lower wick, and yeah, there's no way to know if you're going to continue down really, and that's why it all comes down to risk to reward trades. You can never be 100% sure that we were going to get another move down or another move up, and that's why risk to reward is so important. Okay. Um, I'm just going to go through two more questions and then I'll move on to the technical analysis, and then I'll take some more questions at the end. Just so I'm aware that people watching this back, for example, don't maybe not want to hear just questions and move on to the technical analysis. I need to think of the way that I'm really going to plan this. That the structure of I really need to stay to a tight structure, and I'm aware of this. um, but yeah, I'll take a few more questions and then we'll move on. So do you keep moving your stop loss on swing trades after you enter the trade? Price goes up, stop loss goes up as well. 100%. Okay, this is really, really important. That for me, there are three steps in entering a stop loss. Your first is lessening the risk, which is just entering a stop loss in the first place. Okay, so you first want to lessen risk on the trade by entering a stop loss. Let's say that we entered into a long position off of this 618 again. Okay, let's just say that we are entering into our long here for the example. Okay, so we're entering our stop losses. Let's just, for the example here, and let's say the price moves up. Okay, let's say the price moves up here. You have your first stop loss set, okay, and that's lessening the risk. The second thing that you do is when the price moves up, you move up your stop loss as well. Okay, so we move this stop loss up to break even. Okay, and from lessening risk, we now have zero risk. Okay, we now have zero risk in this trade. That if the price now goes down, well, we're in a position after fees that we have broken even. Okay, and that's the second step. First step, lessening risk. Second step, eliminating risk. Okay, we have now eliminated all risk in this trade by having a break-even stop loss. The third step that we want to do after the price has continued moving up a little bit more is, move to a trading stop loss, or at least place stop losses up below than the next most recent, support level. Okay, and the third step is what's called locking in profits. Okay, so then if this move at any point was to come down, we end the trade in profits. Okay, so it's very much a three-step trade. You first reduce risk by placing a stop loss. You secondly eliminate risk by moving it to break even. And third, if the trade comes as you were expecting, you move your stop loss up to, end in profits whatever happens. The move can then come down at any point and you've locked in profits. Okay, and that's exactly the way that I use stop losses in a swing trade. Always those three steps: lessening, eliminating, and then locking in profits. Okay, very good strategy in my opinion. It works very well. um how do you determine when you swing trade and day trade? This will be the last question, and I see that there are a few more, but this will be the last question that I take on stop losses, and then I'll take some more questions at the end. Actually, I might as well just take the one from Dark Rico as well, because there's only two questions. So really quickly, I'll just blast through this. How do I determine when you swing trade and day trade? For me to day trade a coin, it needs to have volatility. So Bitcoin is a perfect example. It's seen a 4% move down, Ethereum 5% move down. That for me is enough liquidity to day trade, or enough volatility to day trade. I am a day trader that needs volatility. I don't like trading sideways movement. Okay, I don't like trading sideways movement. Although it's possible, don't get me wrong, it's possible. I don't like it. And I trade things that I like to do. So if a coin is moving sideways, I zoom, not trading it. Okay, I will. These are all trade coins on my watch list that I will trade. Okay, it doesn't have to just be bit crypto to Bitcoin. It can also be crypto Bitcoin to USD or Bitcoin to Tether. It doesn't. I refer to all three of these watch lists all the time. So let's just say here we were on Bitfinex. I would look for a coin. Let's say Bitcoin was on zero, up 1%. Okay, well my option would be, what coin's looking decent here? Okay, here we're seeing Neo with volatility today, so Neo would be my day trading coin. Okay, that's how I look for day trading. And if I'm looking for swing trades, then it makes no difference to my volatility. So how do you determine when you swing? So how do I determine when I day trade? It's determined by the volatility of the coin. I hope that answers your question. Okay. But to day trade, I need volatility. So moving back here to BitMEX, and on BitMEX, what is the best way to? Last question this is that I can see here. So, and then we'll move on to the technical analysis of on BitMEX. What is the best way to swap your trade direction after stop loss is broken? Do you set a market stop limit? On BitMEX, what is the best way to swap? I'm not sure. Stop or swap. I'm not sure what you've meant to put it. Swap your trade direction after your stop loss is broken. Do you set a market stop limit? I try and just well, it all depends on where I've placed it. I mean, it's highly dependent on the trade. If I'm honest, your question is very highly dependent on a trade. I will either enter like for instance, like a trading stop or a stop market. Okay, if I'm expecting there to be, vroom, moving straight down through the area, then it will be, I think best is stop market. If you're scared of getting stopped out, because stop market you have no potential, you might not get your stop limit filled if potentially there's that potential, isn't there? And that would be very bad. So if it really does depend on each trade between whether I'm entering a stop limit or stop market. It's very hard to give you an answer because I use both. Um, but let's say the average is probably going to be stop market, because if I've got a stop limit in a place, it's because I expect that move to go down, and I don't want to risk not getting filled, the stop limit order. So let's just say, for the purpose of this, that stop market is the way that I use my stop losses, but it is highly dependent on each trade. Okay, and with that said, that's the questions out of the way and answered. We can now move on to the technical analysis. So I'm just going to take a really quick drink and then I'll explain what's on the chart here. So I hope that you enjoyed the first part of it. As you can try, hopefully you can try and see that I'm trying to increase the quality of the streams each week. I think that our first stream went okay, the second went okay, and the third, I'm hoping that it's going to get better and better and better and better and better. Excuse me there. I really want to give you all a good service. Obviously, I'm aware you're paying for this, although it's not a massive amount of money. It works out at about $10 a week, which I think is personally a very good deal. But either way, you're still paying money for this, and I want to provide this service that you're happy with, and that you feel that you're benefiting from. Okay, so I am each week going to try and get better and better and better and better. Okay. And I hope you can see that. And also with just a really quick update about the website, there are special features on the new website that will be for Avid students only. So I'm excited to, obviously it's not released yet, but my web guy is working very, very hard on it, and he's a very talented web guy. So he's working hard on it, and there will be more features to come. Which I am excited about. I'm so excited about this website. I think it's going to be good. From the website that you all saw recently, it got totally scratched off, and we made a whole new website from the bottom up. So it's looking really good. Anyway, moving on to the technical analysis of the week. Just wanted to clear that up for you all here. So yeah, the technical analysis of the week, which we're going to be looking at Bitcoin, of what we can see, or what I can personally see happening here on Bitcoin, and the key levels to be looking at. Okay. This chart. I kind of don't want to remove what's on my chart. Let's keep this on the chart, and first I'll explain what I've got going on here. I forgot that I had this up, to be honest, because this isn't my main TradingView account. This is the TradingView account that I use for live streams and I use for posting on Twitter, but this isn't my main account. And I forgot I had all of this up. It's because I was going to make a publication and explain all this in a post, and then I ended up not having time to do it. But what I was going to post about here anyway, I might as well just explain it all, is that this was wave 1, 2, 3, 4. Okay, what we were seeing here on this ABC was just wave 4. Okay. And I'm going to give you two scenarios, so you're aware of both scenarios. And as an Elliott wave trader, you always have an alternate count. Okay, so that just means you have two counts, at least two counts of how you can predict this going. Okay, just checking on Ethereum here. That's looking good. Sorry, I entered into an Ethereum position. I was just seeing there. So yeah, basically this is looking at wave 1, 2, 3, and what we have seen over the last few weeks was just the A, B, and C of wave 4. Okay, and I'm well aware that people aren't going to know the inside and outs of Elliott waves here if you're a beginner trader, but a brief overview very quickly here is that within inside waves 1, waves 3, and waves 5, you see 1, 2, 3, 4, 5, and within wave 4, you will see this ABC. Okay, let's change these colors. So okay, so we're within wave 3, within wave 1, and within wave 5, you see 5 subwaves, and within wave 2 and within wave 4, you will see an ABC. Okay, very generalized overview there, because obviously we get a lot more complex corrections than that, but just for the purpose of, just giving you a light overview. Okay, so I believe that we saw wave 1, 2, 3. This was 4 coming up in the form of an A, B, C, truncated C wave. Okay, very important that you realize that this is not normal to see, but it can happen. Okay, I don't really like charting for truncations because they are quite abnormal, but it appears that's what we got here. Okay, so that's why I have to, stay trading. That this was a 5-3-5 truncated fifth. Okay, not the greatest pattern here, but it definitely seems to have ended now with a truncated C wave. Okay, I'm fairly certain that it's ended like this. So that was the ABC, and now what we're doing is we're coming down again for this final move downwards. Okay. And I'll be going over where my targets are in a second. But there are again a few ways you can be trading this. In my way, it was a 1, 2, 3. This was some very complex correction. Okay, this was such a complex correction that it was originally seen as an A B C D E that would break downwards, and it would obviously ended as this A B C D E. Well, actually, it didn't end as the A B C D E. We broke upwards. Okay, so if you want to do it as the triangle, you'd have had to have taken this as an ABC. Then this is an A B C D E. Okay, so that would be a WX and then ending with a kind of ABC coming back up. So a WXY correction is what seems like it happened here on a smaller time frame. Okay, ABC, W, ABCDE, X, ABC, Y. Okay, so WXY in the wave 4 is what I believe happened, to be honest, in the end. Obviously, I actually was in a short position here of the ABCDE. Expecting it to break down. But as you all know, I made it very clear that this was a 50-50 coin flip of whether we were going to break up or down. In the end, I'm happy that it broke up because I got an amazing short entry, so I was very happy, as you all know. But it worked out very well in the end. And I still see that this is going to be wave 5 coming down, basically. Okay, and then this will be 1, 2, 3, 4, 5, and what will that form? That will form on a bigger time frame, wave 1. Okay, that will just form wave 1. We will then get a bounce in the form of an ABC for wave 2. Okay, then we will get another 5 waves down for wave 3, coming up in a bounce of an ABC and coming back down for wave 5. Okay, what will this give us? This will give us the potential of having another descending triangle. Okay, I think we are going to be seeing seems very likely another descending triangle within our Bitcoin here. Okay, I think that this is very likely in my opinion, and the way that I will see it playing out is this was just all wave 1, then we come back up for wave 2. Okay, wave 1 I believe will bounce around this 786 region, 786. I'm going to go over the 200 weekly moving average in a second, but around the 786 just below, around 3,200. Okay, then a bounce back up. Okay, this is going to obviously have to be a slightly lower. Bounce back up for wave 2. Coming back down. Yeah. Coming back down for wave 3. Okay, coming back down for wave 3. Coming back up for wave 4. And then coming back down for wave 5. Obviously, in terms of Elliott wave count, this isn't going to be the count because I'm breaking a rule here where, this is probably going to end up being quite a long wave, if I'm honest, of the final wave. So we'd have to be looking at some sort of starting diagonal here if we're looking at wave 3 being short and wave 1 and then short on wave 5. But kind of let's just imagine that this is how I see it coming down in a descending triangle, and we'll sort out the Elliott wave count in a second. Okay. Sort out the Elliott wave count in a second, but I still do believe that we're going to see a descending triangle playing out from the 200 moving average, but please do not refer to this Elliott wave count in a second. I'm just going to explain to you now why I think we're going to be bouncing and forming a descending triangle. Okay, why do I think that? Well, I have a very big important bias of the 200 moving average on the weekly. Okay, and this is what I see playing out. Okay, this 200 moving average, as you may or may not know, is I've covered this in past live streams, so I hope that you know by now that the 200 moving average is a really, 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 really important support level. Okay, so I've said really highlighting there, it's such a strong support level, and you have to be taking a note of this. If Bitcoin breaks down and closes below the 200 moving average, it is extremely, extremely, extremely bearish. Okay, very bearish, where we can be seeing at very low prices basically for Bitcoin. Okay, and if you're bullish long term, then good. But if you are a trader, also good because of the opportunity, but a lot of people will exit the market. I very much believe a lot of people will exit the market if 200 moving average breaks, because it is very bearish. Okay, the liquidity will be low. I'll still trade the market, but I'm aware that the liquidity will be a bit rubbish while the accumulation. Okay, that's a time to accumulate, but that's for another video. But the reason I think that we'll be getting a bounce off of here, because it would play out very nicely to get some sort of descending triangle going on here, okay, where we get something like this, okay, where we obviously came down once, got a bounce up, come down, hit the 200 moving average again, get a bounce up, come down, maybe break through halfway through this triangle on the third touch. Let's say we get one more bounce and then come back down, okay. And I am expecting the descending triangle, something like this, to form, where, as you all know, in 2018, all we saw was this descending triangle play out, where we had lower high, 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 reaching the apex, literally the apex of this triangle. As you all know, I managed to short the exact top here. Okay, so I had the most perfect short entry in the world, and that was yeah, amazing. And I'm hoping to do the same again here. That would be lovely, wouldn't it? We'll see how it plays out. But yeah, obviously, this was our descending triangle breakdown. Well, it actually seems very, very likely that we could be forming another descending triangle here, with the continuation of exactly last year of lower high, lower high, lower high, lower high, lower high, lower high breakdown, was lower high, lower high, lower high, lower high breakdown. That I must just stress that I am not trading for a breakdown as of yet, because we have the 200 moving average. Okay, this for me is very strong support, and you would be naive to short above the 200 moving average. And I do believe you'd be a little bit naive there, or a little bit too bearish of a bias to short above this, because it is such a strong support. Okay, it's really strong support. Obviously, if you were short from 4,400 for a long-term short, then you wouldn't be having to worry about it, and you can hold your short. But if you were not short from 4,400, 4,200, then in my opinion, it doesn't make I wouldn't be looking for a short on the 200 moving average. Let's say we break down over the next few days onto here. In my opinion, wouldn't make sense for me to short for 3,200. I would much prefer to short a break and just market short into this. Okay, I'm sure that if we broke down from here, a market short would be fine. Um, Again, not financial advice. Please do not take anything that I say in this video as financial advice. It's just my opinions on the market. But this is how I believe it's going to be playing out. Okay, where we get another descending triangle here, and then break down, we're talking mid-February time, possibly February, March time. Okay, I foresee another breakdown coming on Bitcoin. Obviously, this will be invalidated. It's very easy to get an invalidation point, that if we come down and bounce and make a higher high, well, that's the descending triangle invalidated. And if we actually come and make a higher high here, then that is short-term bullish. Okay, short-term bullish should this break. So I'm definitely keeping my eye on this descending resistance line. And if we break over here and then make a higher high, well, yeah, that's going to make me short-term bullish. Okay, short-term bullish, because I still believe that we can be seeing like a move up to the 382 Fibonacci level, 4,400, up to a possibility of 4,600. Why do I think 4,600? Because if this is just A and B, then we can look for a zigzag of the AB up to the one-to-one extension, which sits at around 4,570. Obviously, if this comes down to our 200 moving average, we're looking at 4,300. So basically, between 4,600 and 4,400, well, really this high of 4,200, that is such high resistance. And I know for a fact, if we bounce up and get up to here, the average trader is going to be extremely euphoric, thinking that the bear market is over. Okay, I do believe that a lot of people will be thinking the bear market is over if we get up this high, but really it would be looking like an ABC and then come back down. Okay, so we would not be out of the woods, but should we start to break that descending triangle line, then you can be looking for short-term plays long up to the levels of 4,200 up to 4,600. But until we break 4,600, I would still be looking at it like the A, B, C, like this. Okay, A, B, C up to the 1-to-1. Okay, that's another scenario that I have my eye on. As I said before, I have my eye on a lot of different scenarios. I'm not playing into a bias. I literally don't care whether the market goes down or the market goes up. I will trade any market and long or short. Zero bias. All I want to do is make money at the end of the day. It doesn't make any money difference to me if I make the money going down or going up. Okay, I have zero bias. If anything, I'd prefer the market to obviously go up, because on Bitcoin you can start to look at thousands of percent gains. But yeah, I obviously am having a bearish bias here. I do believe that the market's going to go down. Um, but I'm not trading like that. Okay, I have a belief that we'll go into a descending triangle going to break down, but I will just trade whatever happens. Okay, so those are my two outlooks. Looking on a lower time frame of what's likely to happen tonight. Just taking a drink real quick. Sorry, when I like speak for a long time in these live streams, my voice starts to go out. I hope you can appreciate it. When I'm speaking on my own for quite a long time, my voice gets very dry, or my throat gets very dry. Sorry about that. But yeah, I am expecting some break to happen in the very near future, going into the weekly close tonight. You can see the possibility of forming some sort of descending triangle here, although not unofficial, but it seems like we'll be trying to get some sort of break going on here. Okay, seems like we're forming something within here, or we should get a break within the next few hours. We got a weekly candle close in, what is it now, half eight, 3.5 hours. Okay, so it'd line up quite nicely with the apex of this symmetrical triangle. Well, I would expect some volatility going into the candle close tonight. I always trade the weekly candle close on the 1 minute, 3 minute charts, scalping. So again, it makes zero difference to me whether we break up or down here. I literally couldn't care. If we break up or break down, I'll trade it either way. But it does seem likely that a break, we hopefully will get some volatility. As you'll know, I love trading volatility. So I'm hoping that we get some volatility going into the weekly candle close. But I am aware that after such a big move down already, there's the possibility that we just move sideways. Okay, that's a possibility after already seeing such a big move, that we could just fizzle out sideways here. So that's Bitcoin. Let me cover Ethereum for you really quickly, because that's the coin I'm more interested in. Okay, that's the coin I'm in a position in at the moment. Okay, I was gonna wait till the candle closed on the weekly, but I was feeling a little bit like I didn't want to wait. I saw too many other people commenting on my people. I made a post on Twitter. What I'm referring to. Hey, do you like this meme that I made? I thought this was funny, but I've got such a dry sense of humor, and this is a really poor made meme. Um, but if you haven't heard this song, it's yeah, I've got a really bad sense of humor, but I found this quite funny. Um, I waste a lot of time. Basically, I made a post saying, sorry, I'm getting distracted there. I'll read through those comments later. But I made a post basically saying that I was going to go long on Ethereum. Okay, so I was saying that Ethereum is looking more bullish than Bitcoin, holding above the, I'll go over in a minute, or well, I might as well just use this post. Okay, why was Ethereum looking more bullish than Bitcoin? Okay, Ethereum held its low from back on the 13th of January. Bitcoin broke through that low, okay, on the 13th of January. Bitcoin broke the low, Ethereum held the low, okay? That's the first point. Secondly, we're above the 618 Fibonacci level. That's another support, holding the support. This is exactly what I wrote, holding above the 618. The volume is also looking better for Ethereum. Okay, there's, not, I'm not going to say it's great, but the volume is a lot more healthy. Okay, there's a lot more volume coming in that sort of sense. For there's no issue for me of the volume itself. Okay, and for me, I wrote, if support holds over the weekly close tonight, I will open a long, great risk to reward. And then I had people also commenting that they were looking to do the exact same thing. Okay, just looking to buy in as well. And I thought, I'm just gonna buy, because still the risk to reward for me was very good. Okay, you're always referring back to your risk to reward ratios. For me, the risk reward was a decent buy, and should it get stopped out over the night and we get a move down, again, I will not mind at all. Okay, I will take the loss. I've made enough profits to not worry about taking a loss. And another thing is that every single trader loses. Okay, please, if you get a trader that tells you that they never lose, you need to probably just remove them or not listen to them, because it's definitely not true. Okay, no trader is ever going to win 100% of their trades, and if someone tries to tell you that they are lying. Okay, because it's impossible. Every single trader loses. Okay, so please don't believe anybody that says they do never lose, because there are traders that like to come across like that. But yeah, I'm in a long on Ethereum, and if we get a move down overnight, I will take that loss, because I see great opportunity should we break down from here. Okay, should we break down from the 618 Fibonacci level, I see great opportunity to play that, even opening a new position. Obviously, I'll be stopped out of this long, but I see great opportunity for the downside. Should we break down from here? Okay, I'm in a long. Okay, I want to be really transparent. I'm in a long position, but excuse me, if we break down, if we break down, I see great opportunity here to the downside, where I'd be looking for a double bottom at least. Again, we're talking 25% space for a double bottom scenario. Okay, that's a very big move down. Okay, but before I start looking for short opportunities, I first want to concentrate on, long opportunities, because I believe that we're looking more bullish at the moment, and there was potential for a short-term move up here on Bitcoin. I'm sorry, on Ethereum. Okay, because of how I thought it was looking more bullish than Bitcoin. Okay. And as you can see here, I was looking at for some sort of B wave up. We had 5, it's expecting this to be some sort of A, B, and moving up, for within the B wave. Okay, within that B wave, an A, B, C coming up. A potential, okay? Okay, potential of this B wave coming up here. Okay, and that's what I'd like to see in some sort of A, B, C, moving up. You know, that's a potential that I have going on here. Okay, nothing's going to be confirmed. And I am more than happy to leave this. Well, I'm going to be actually trading the weekly candle close, so I'll be there ready. And if I get, I'm going to be at my computer. Sorry, my screen's gone into night vision mode. But yeah, I'm going to be here ready and trading either way. But I'm happy with the risk that I'm accepting on this trade. Okay, I'm happy with it. We'll just see, whether the B wave, if we even get a B wave up here, it's the potential that this again was on Bitcoin, like a 1, 2, 3, 4, and we get another move down here. And I'll be trading it. I will take the loss if we are to move down here on Ethereum. Again, I will not care, and I'll enter into a new position within a matter of minutes. But that's what I'm looking at on Ethereum. I am long. I'm not in a position. Well, I am still in a Bitcoin short position, but I'm in a few. It's hard when I say I'm not in a position. I refer to like no short-term positions at the moment on Bitcoin. I play cryptocurrency across quite a few exchanges, and I'm always in a position of some sort. But it's normally positions that I don't like to disclose too much. Just to people, I don't really like to disclose every position I'm in. But yeah, I am in a short on Bitcoin still, which I'm pretty sure I've disclosed this publicly. That was opened at around 3,800 or something. So I'm in a Bitcoin short, which I plan to hold. I'm also, but on other exchanges, I'm in Bitcoin shorts that I am still holding from like 6,500. So I've got short positions that have been opened now for like 3 months, and it's just a position that I'm paying fees on this short. I'm paying fees on this short. But I'm just going to keep holding it until it reaches a lower target that I have. It's kind of mad, and I should just close it. But for me, I just like really, I'm just going to keep it open. I don't care. But yeah, so I am in longer term positions as well. But yeah, Ethereum is my main short term position that I'm playing here. So yeah. I'll go through a few questions if you have any. Yeah. So can you talk about the volume? What is it that you look for? Like for instance, on Bitcoin, that I was looking for, after you have a big move, I like to see if there's volume continuation. So we need to zoom down to the 1 hour here. Like, what I don't like to see on a move is this, that you get a pump up, okay? You get a pump up on this bar candle, okay? You pump up on this bar candle here. You pump up on this bar candle, and then straight away all you see is, in the consolidation period, all you see is bearish candlesticks pointing upwards and very little follow through. Okay, so you pump up and straight away you just see bearish candlesticks, and that's the sign that you're going to move back down. Okay, for me, you want to see bullish continuation. Again, what happened this time? You pump up, straight away all you see are bearish candlesticks, zero bullish continuation, and guess what? Again, you come back down. So I always refer to volume. It's not a major thing that I just trade off solely, but I like to refer to volume when we're looking at like confirmation on breakouts, and also for consolidation, I refer to volume. So those are the main times I refer to volume: on breakouts of a pattern, and also on consolidation. The weekly candle close causes volatility, if I understand correctly. Why is that? Good question. Why does the weekly candle close cause volatility? Because the weekly candle is so important. Okay, so you see this candle that we're getting right now. I believe that bulls really will want to hold. That's called the right price exactly. The bulls will really want to hold. Sorry, I hate it when all this comes back up. Let's just use a clean chart. Okay, so here we are again. The bulls will extremely want to hold. Obviously now we're on Bitstamp, but the bulls will want to hold around 3,515 because that was last week's close. Okay, that was last week's close. If this week closes below that, then that is extremely bearish. Where if we get a candle close below 3,515. We're currently at 3,016. You know, the reason you get that volatility coming into the candle close is that the bulls are going to be fighting for 3,515 support. Okay, they're going to be fighting hard for that. I might as well just read it out to you on BitMEX because, you know, it's quite important. What I think most people trade on BitMEX here. You know, we're looking at basically around the same let's just say 3,515. Bulls are gonna want to hold that, although still it wouldn't be massively bullish. It's more massively bearish if we close below last week's weekly. Obviously last week we had this bearish engulfing candle, where, you know, what I refer to by bearish engulfing candle is this. You see what happened here? Okay, you see what happened here, where the weekly candle bearishly engulfed this whole candle. So they opened at the same point, and then you get a bullish revert. You know, terminology, bearish engulfing candle here, where it engulfs the whole of the previous candle. Okay, and then what happened? You had another week of bearish continuation. Here we see a bearish engulfing candle, but being held up currently. Although we have you know, this isn't the most bearish candle in the world actually. You know, it's all right so far for the bulls, and I think the bulls are really just going to hold this 3,515 level, because if we close below this, or next week, I would expect a bearish week. Okay, to at least start a week coming down to the 200 moving average. If bulls hold last week's weekly candle open 3,515, then they have a little bit of hope. Okay, they have at least some short-term hope for another move up. Okay, and I think that's why you know, for me it's so important that the bulls hold this last week's weekly candle open. Or close what it closed at last week, 3,515, and just to repeat again, it was 3,513 on BitMEX, and Bitfinex we're looking at 3,591. Okay. Obviously, the volume of this week is below that of last week, but that's because last week we obviously had a very big move down. Okay, each week it'll be very interesting to see whether this closes as a red or green candle as well, to be honest. But you know, that's why you get the increased volatility on the weekly candle close, because you've got more interested from people, you know, fighting for this up or downwards movement of the weekly candle close. For instance, bulls are going to be trying to fight to get this as high up as possible to end with a nice, you know, higher up candle close. Bears are obviously trying to force this down, and this week closed below this weekly candle close. Okay, so that's why you get the increased volatility, because there's more up for stake. Okay, you've got the whole weekly candle close to fight for. Okay, hope that answered your question. And lastly, this will be the last question I take. How do you make your fib levels look clean like that? And how do you show the 0.65? Okay, brilliant question. And I'll show you all now. So this will be the last question. I take my fib levels from the bottom to the top, make it clean, double click on your Fibonacci retracement, and in a space, or here for example, remove 2, write in 0.65, okay, write in 0.65 under style, and just tick it, okay, and that will add in the 6:5 ratio, okay. So just repeating again so you understand. Draw your Fibonacci retracement, double click on your Fibonacci retracement, click on style, click on an open space, type in whatever number you want really, 0.65, tick the box, and that will add it to your chart, okay. Say I wanted to add that 2 back in, and then you just double click and tick the box and that adds it back in, okay. So that's how you do it. So yeah, yeah, very simply that's how you do it. You can also, if you're in here, change the colors. Like if you want to match my colors, you can change the colors in here. You can change the background if you want a background. You can add in this background, something like this. I used to have it like this, and then people were like, this is why I trade off of different charts than what I use for Twitter. I actually like having my charts, well, not that high, but like something like this. But people were just moaning or not liking this, so for my Twitter charts, I have it like plain. And that's why I have a different TradingView account. Not just this sole reason, but that's why I have a different TradingView account for my personal use and for public shares. Because, yeah, basically. So yeah, hope you've all enjoyed this video, and that would have been the questions answered. And yeah, hope you've enjoyed. Keep an eye on 3,515 for the weekly close. Hope you've enjoyed the first part on stop losses and risk management. The risk management was very light. Mainly I wanted to cover the stop losses, which I hope I done well enough. If you still have residing questions after the stop losses, obviously I can always repeat and do another lesson on stop losses. But if everybody's okay with what I've covered today, then next week we can move on to something else. But if people still have outstanding questions particularly, then you can write it, and I can cover your questions prior to next week's session. Okay, so you can make a note of your question, and then that will be the first thing I cover, for example, next week. Okay, just answering a question if they have one here. So yeah, hope you've enjoyed tonight's live stream, and I will catch you all in the chat over here on Discord. I'll have to watch it later on. That's a shame you missed it, Ed, but I hope you've enjoyed this video later. It will be uploaded to YouTube so anybody can catch it. Yeah, hope you've enjoyed. And yeah, that's the end of the live stream. Thank you everybody for joining me this week, and I will see you all in the chat, or alternatively next week in the live stream. Thank you for watching, and yeah, catch you all soon. Cheers.